Hey everyone, are you thinking about investing in the stock market but don't know where to start? Or maybe you have started but are not sure how to maximize your profits. In today's video, I am sharing 5 golden rules that will help you invest smarter, reduce risks, and grow your wealth over time. These are evergreen strategies that even top investors like Warren Buffett follow. Stay till the end for a bonus tip that could help you make consistent profit. Let's dive in. Rule number 1. Invest for the long term. If you are looking for a quick money, the stock market is not a get rich quick scheme. The key to real wealth is long-term investing. The S&P 500 has historically returned 8 to 10% per year. Investing consistently over time beats short-term trading. Compound interest is your best friend. Your money grows on autopilot. Example, if they invest just $500 per month in an S&P 500 index fund, you could have over $1 million in 30 years. So a chart of rule number 2, don't try to time the market. Many people try to buy low and sell high, but even professional investors fail at time the market. Instead, use dollar cost average DCA. Invest a fixed amount every month. Ignore short-term market swing. Build wealth steadily without stress. Rule number 3, diversity. Don't put all your money in one stock. Ever heard the phrase, don't put all your eggs in one basket? That's the golden rule of investing. Instead of betting everything on one stock, do this. Invest in index fund like the S&P 500. Hold a mix of stocks, ETFs, and bonds. Diversity across industries and sectors. Pro tip. Even Warren Buffett recommends index fund for 90% of investors because they are low cost and high return over time. Rule number 4. Understand what you invest. Never invest in a stock just because someone on the internet told you to. Before investing, ask yourself, what does the company do? Does it have strong earnings and growth? Does it have a competitive advantage? Use free tools like Yahoo Finance or Seeking Alpha to research before investing. Rule number 5. Keep emotion out of investing. Fear and greed are the biggest reasons people lose money. When the market crashes, people panic and sell at a loss. When it's booming, they buy overpriced stock instead. Stick to your long-term plan. Ignore short-term news hype. Remember, market dips the opportunity, not disaster. Bonus tip. The 80/20 rule of investing. Did you know that 80% of your returns come from just 20% of your investment? This is called the Pareto principle. Focus on high quality stocks and ETFs. Avoid hype-driven stocks with no profits. Stay patient. Wealth builds over time. The stock market is a device for transferring money from the impatience to the patience. This is Warren Buffett. That's it for today. Which of these investing rules do you follow? Drop a comment below. Like this video if you learned something now. Subscribe for more investing and money making tips. Check the description for my recommended investing tools. Thanks for watching. See you in the next video.